So Keith, we were joking or sort of observing about, look, your bullishness on names like NVIDIA, Palantir has been totally justified. You must be sitting on some huge gains in those names and some of the others. What are you doing here with stocks all the way back to all-time highs and those names being a big part of why?
Well, thank you for asking and thank you for remembering. We've got very lucky. We could have easily been wrong. But, my view is a little different than Bill's. I think we had a tremendous amount of liquidity sloshing around the system, and traders are doing what they do best. They're getting ahead of what's next. They know that eventually this stuff is going to pass. So not all companies are the same, but a rising tide raises all boats. Do we pump on the brakes here? Yeah, I'm going to actually start to trim pharma because I think there's some problems ahead from a regulatory and legal standpoint. But I'm not letting go of those key tech names because this is like the gold rush. The folks who sold shovels and whiskey made a lot of money. The gold miners, not so much.
So you're trimming your pharma stocks, Keith. It's not. So there are some people pointing to, like, look, the momentum ETFs and all these signs of froth in the market. Goldman's list of less profitable companies outperforming the more profitable, all this stuff, right? If you were somewhat concerned about this rally becoming overextended, would you pocket some gains in some of these hot stocks, especially like a Palantir, or no? Why are you sticking with them?
Well, I'm sticking with them because I think we're still early innings with AI. We're still early innings with much of the data restructuring that's happening on our planet. And every one of those companies is at the key of 10 other companies that are adopting or adapting or dying. So companies that are going to continue to spend, they no longer have a choice about that digital stuff, Kelly. They've got to spend. That, to me, is lots of revenue down the line. We're going to take it cautiously. We might slow down our buying a little bit, but we're still well within the statistical norms in terms of volatility.
All right, Keith, but you're saying, you sell pharma. Anything else you're selling? You're hanging on to the good ones, hanging on to your tech?
Well, we try to stay with the winning horses as long as we can, as long as we're winning the race, right? But pharma, again, I've got some very real fundamental concerns in terms of how they're going to be handled.
Yeah.
But, if we rotate, we're going to rotate into defense. We're going to rotate into things where technology is going to be a logical extension. So, yeah, pump the brakes on. I love what Bill said. I agree with it. I don't like as much the international names because, as much as those are challenge and opportunity, 9 out of 10 tech dollars still flows through a handful of U.S. tech companies that sell internationally. So you're already getting that.
Well, gentlemen, thanks. Appreciate it today. Both points of view, Bill Struzzulo, Bell Curve, and Keith Fitz-Gerald from the Fitz-Gerald Group.